Hello and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, here on this YouTube channel. As you know by now, the Daily Market Mastery episodes are to give you an insight into how I analyze stocks and indices using Elliott Wave Theory based on pretty much everything that's written in this book and the one-page cheat sheet that is also linked in the video description down below. Now, for yesterday, we didn't have a stream, and before that, we basically just finished. Gonna share my screen in a second, labeling or applying a new pattern to the chart. Now, if you are new to the entire series and you have no clue about Elliott Wave Theory, I would recommend that you first check out episode number 1. It's a little longer than the episodes we're aiming for because it contains a lot of basic stuff about Elliott Wave Theory. Then use the link in the description down below. There you can get you can either read the Elliott Wave Principle book for free online, or you can order a physical copy if you'd like to. And you can also download the one-page cheat sheet that we're using in the stream for free. Last but not least, quick reminder, I'm actually screen share, so should be the right one. So as far as tools for Elliott Wave Theory go, you can use either TradingView, there's a link in the description down below, and simply use the manual labeling, or you can sign up for Wavebasis. So there is either a link in the description down below, or it's wavebasis.com, so not that hard. And after the trial period, if you decide to not pay, you can still use most of the features. However, you're limited in how far you can go down in the time frame, and you cannot use auto labeling anymore. But overall, it's still a nice tool to check and verify, especially because Wavebasis has automated projections for potential target areas for specific waves. That said, the best tool, in my opinion, is the one that we're using here. It's called Motive Wave. It looks a little bit outdated, but it actually is super neat because it has features like this, that basically the moment I'm violating a rule of Elliott Wave Theory, it actually actively tells me, hey, there is a rule violation, which means my labeling becomes invalid. Now we're looking at what we did here yesterday. So again, if you're fresh to the whole thing, episode 1 is your starting point. And after episode 1, I would actually recommend that I don't want to move. I want to get the wave 1 here. After episode 1, I actually recommend that you check out the episode from Monday, which would be episode number 4. I'm going to double check if I've numbered them correctly. 1, 2, 3, 4. Yes, episode number 4, because that's where we came up with this labeling here. Now we can transfer that labeling real quick into Wavebasis. Just going to get rid of everything. So our assumption is that we have a big wave 1, 2. Although we are only labeling from 2009 right now, so we are not labeling from all the way back. So, and which means we're currently assuming, I have to put it here, that we have a high for 808, for 818, yeah. So, no, not ABC. We want an impulse wave. Okay, delete again, and impulse wave it is, and 0, 1, and yeah, the rest is not relevant right now. So, which would give us a predicted retracement area of this, or like this. However, if we consider that obviously there is way more history to the SPX, then the retracement area would actually look different, because again, we are currently only looking at this part and the retracement that's supposed to follow here. And yeah, and then additionally to that, we have said that we have a leading diagonal up here. And for that, we need to go, not sure if we can go, let's try to go 1 month. And that's 1 minute actually. Yeah, oh no, that should be, yeah, it's not 1 minute. Okay, so that's what we have here. And here we said we have a leading diagonal. Now, Wavebasis doesn't differentiate between impulse, leading diagonal, and ending diagonal, but that's not going to be a problem for us here. So we would have, let's double check, our starting point is actually January 2022. And here we have 12:30. Okay, no, we are definitely too far. So let's say 6. Okay. So time frame, sorry. So we need a more than 1 year time frame. And let's go back here. So there we have January 2022, roughly, yeah, so that's our starting point. Okay, got it, my mistake. So that's where we start here, and then we have an impulse wave that basically, and again, we have to pick a random point here. So that starts here, and we said it goes roughly like 1, 2, 3, 4, and 5 as a so-called leading diagonal. Now we can put that point on top, and then based on that, we can see if this here is wave 1, wave 2 would have predicted that it goes till here. Again, as a reminder, when we're using wave bases, and I'm going to move the camera since we are up, so that it's not in the way. When we're using wave bases, we basically always get a prediction based on our wave. So it's not that it makes that orange, I'm going to lock that in real quick. It's not that it makes this orange prediction block here based on what happened, but if I were to move this, you see it would also change the prediction. So, and we can see that this checks out very well. Now for wave 2, it actually then predicted, all tools, this area here, which is again on spot. And again, if I would have put wave 2 here, or I would have put wave 2 here, then we can see how that area changes. And so it's not that it's using the data that's already on the chart to tell you, hey, this is where it went. If we would not have the candles here, it would have still already told us based on those 3 points that it's expecting it to end up here. Now that area is not always as accurate, yeah, but we can see that, like here we have an example. So here for wave 3, and that's like, again, one of the shortcomings of wave bases, because in an impulse wave, if we quickly switch to our cheat sheet, which you should see here, so in an impulse wave, we basically always have wave 4 cannot retrace into the area of wave 1, whereas in a leading diagonal, wave 4 has to retrace into that area. So if we switch back to the screen share, so, and motive wave, again, doesn't differentiate between impulse, leading, and ending diagonals, which means it assumes we cannot go higher than this, because otherwise it would not be an impulse wave, yeah? So that's why that area is basically stopping short of the 1 point here, because for it to be an impulse, it would have had to turn around at latest here. But if it's a leading diagonal, we can go here, and then we can see that here that prediction is again a little bit more accurate, but it's still not perfect because it again is based on the assumption that this is an impulse and not a leading diagonal, yeah? Now, we can still, however, use that and get like a little bit of confirmation in terms of, is our labeling here so far likely correct? And if we again motive wave, switch back, so it looks like that part here checks out, which would make this again wave 1. And again, our assumption is that this here completes our wave 2, which means we can use another impulse wave. I'm gonna just start it from here because I cannot start it on the blue dot. And basically we are saying that this is 1, this is 2, and we don't know where 3, 4, and 5 are yet, yeah? And just gonna fix that 1 point here. So there we go. And then we can see if we log that in, based on the motive wave projection for an impulse, if this is our starting point, this is wave 1, it would actually expect that we turn around somewhere in this region. And I mean, we touched that region here, which is good, which means so far the whole thing checks out. Now, however, yeah, that's fine. Sorry, like I was already looking 1 degree deeper, because obviously between that wave 2 here has then to be a corrective pattern. And we have here our rough assumption, although that's like just randomly put. We obviously have to get out of this space channel that we drew using Kennedy channeling technique, which you can learn about in episode number 4. And motive wave, however, would tell us that our wave 3 is down here in the range from 2000 to 2000. So somewhere here. And then with a wave 4, that would be, let's lock in all of that. So, sorry. Yeah, so wave 4 somewhere here, and then a wave 5. And again, let's lock that in. Lock, unlock, all. So a wave 5 that basically would then be also again somewhere here. And obviously, if this here goes further down, so would the rest as a result. Yeah. But that basically is the motive wave-based prediction. Now, to, in quotes, confirm that a little further, we're going to zoom in again or scale this again a little better. And because if this is a wave 2, it should at least subdivide into a zigzag or a flat. It's not a flat because a flat would have a new all-time high, or in this case, all-time low. So if it's a zigzag, it should be that high here is 4.1, and that's lower. So it should be like this. And we can see here again the predicted ranges, at least for wave B, check out, but the range for wave C would actually expect that it goes further up. So yeah, like no 100% confirmation here from wave basis, but however, we only use wave basis to basically kind of like get a second opinion. But also I'm using it to show you just how powerful it is, especially when you're beginning with Elliott Wave Theory. Now, again, which makes me point, you will see the disclaimer at the bottom of the stream/video. Obviously, everything that I'm sharing in this stream/video is my personal opinion and in no way professional or financial advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Or in other words, don't just blindly trust what I'm showing you here. Double check it, read the Elliott Wave Theory book, apply other strategies and indicators to whatever predictions we are drawing on the charts, and then make your own decisions. And the same applies for wave basis. Just because wave basis says that, okay, we actually should go further up, I don't know, here, doesn't mean that it will happen. So don't just make your buy order and hope for this to happen. Now, which brings us to an interesting point. So most of this here, and we're going to go back to motive wave. So most of this here, we are actually able to more or less confirm so far. And we already have the assumption, zooming in here, no, wrong direction. We already have the assumption and already drew yesterday a new base channel, assuming that this is wave 1 and 2. And we can also do the same thing here. So in this case, we would assume that now that's basically the beginning of wave 3. And we said that this here turns out as wave 1 and 2, and then 3, 4, 5, we don't know yet. And yeah, so to have that, so we see that actually the retracement here would be within what wave basis expects. And for wave 3, we would now, if that turns out right, actually expect to fall down or go down into this area, which would then be followed by a wave 4 that takes us back to here, and which would then be followed by, block all of that, by a wave 5 that then takes us down to 3,300. Yeah. Now the timing of the whole thing is a whole different question, and obviously it's not set in stone, because if we would reach a new high that's higher than the 4,039.49 that we had here, then this would invalidate this labeling, and we would have to adjust our 0.2 here. But right now, especially if we zoom in a little further, because we can also then, again, it's a second wave here, so we can say, okay, we have another corrective pattern here that is likely A, B, C. And if we check that, okay, here we fall a little short and here we fall a little short based on the motive wave prediction. It could, however, also be different. So again, like, also wouldn't check out. I mean, A and B would check out, but the most likely candidate here, without zooming in and trying to determine it, would be something like this, which sadly, again, in wave basis, we don't get the exact confirmation because we fall short here and we fall short here. But again, we're not using wave basis as our ultimate guide, just as a quick way to check. Yeah, so delete pattern. Yeah, so also, in case you're wondering, those streams are aimed to be around the 30-minute mark, so that we don't like make them endless long and too mind-blowing and get lost in complications. And I already forgot, but I'm gonna start my stopwatch now, and we have basically another roughly 15 minutes left before we call it a day. And yeah, overall, I'm fairly happy with our labeling for the SPX for now. As said, that pattern here could still turn out to be invalid, so the small one, but I'm fairly confident that this pattern here holds, which means as long as the SPX stays below 4,195.44, that pattern here still appears to be valid, and we can assume that while we still might have a little bit of an upward movement right now happening, that we actually are going to see the downwards trend continue within the next couple of weeks. Again, the time factor here, just because it says July here or so, isn't that relevant. I mean, there is also a whole chapter in the books about the time aspect of it, and that's something that I haven't mastered yet, so I'm not going to go and tell you, okay, that's going to happen in 2 weeks or so. I'm just saying that I personally am going to move that camera back here, because for Motive Wave it makes the most sense, so that I personally expect that we will see that downwards move happen in the future, so that we will not see a new all-time high here. Simply based on saying, okay, we have the end of a fifth wave, and that actually is also a fifth wave of a higher degree if we consider, again, we are only looking at 2009, so from here to here, but in the end we actually have a wave of an even higher degree that ends here, which means that divides in 1, 2, 3, 4, 5, something like that, and which means the corrective pattern here is actually bigger, yeah, like a lot bigger than, I mean, not till down here, yeah, because that would be end of the world kind-ish, but yeah, like somewhere till down here, so below the 1,000 points. So talking about another, what do we have, 75% drop or a little bit more still to go. But yeah, overall, I'm happy with that. And because of that, I'm also not going to change or close or adjust the short positions that I have in the SPX right now. Just doesn't make sense if my own prediction method that I trusted in the past and that is responsible for the results that I had over the last 3 years, which you can, by the way, check out by following the link in the pinned chat message or in the description below. So yeah, that checks out fine. So we can actually move on and get a new chart. And here, yeah, like we are looking actually for the NDX. Yeah, so NDX would it be link? Nope, no group. So inherit settings, yes, yeah. So. And we'll take a moment to get our data. Personally, I still haven't sorted out the data sources, so I'm still using Interactive Broker as my data source, since I have a portfolio with them. Although I don't hold anything there, I literally just have a couple $100 there to cover the monthly fee, which is like $30 or so for the data feeds. And there we don't need anything. We just go here, NDX. We do the same thing. So we again use basically our, and we're going to clear that here, but clear all. Our history from TradingView, just to confirm how much history we are missing. So here we would have a starting point in 1985. And from here, if I would have to label it, let's see, yeah, I probably would go with something like 1, 2, 3, 4, 5. Yeah, might not turn out to be perfect, but if we use Kennedy channeling technique, we could, for example, say, okay, wave 5 usually terminates either on the top or the median of that destination channel, and we're somewhere here, so might check out. Now we'll have to switch to the monthly chart here. And we see again that we basically have data from, what's that, 2.6 or no, 2.9 as well, yeah. So roughly 2009. So we are again looking at the whole thing from roughly here. And similar like in the SPX, so we have to consider, while we are able to label this, the corrective pattern that might tell us to go here actually will be a corrective pattern that should consider the whole history and should go bigger. And yeah, let's see what we turn out here. So again, we're gonna just say we're gonna label an impulse here. We're gonna try to let it do it automatically. And yeah, it doesn't turn out as nice as it should. If we do not have logarithmics here, then it might get it done better. Nope, still. Yeah, so in which case we for now simply are going to switch back to a logarithmic chart and yeah, zoom in. And are just going to get it done from the top down, so which would be from this high here. And again, same thing. So since we are actually expecting to see a corrective pattern here following, which would be like A, B, C, and we can also then in motive or in wave basis, which probably, yeah, I don't want to upgrade right now, but it will remove all of this. So I'm just going to zoom out a little bit so that we maybe get everything in one picture. Yeah, so we can circle back in the video if we would need that again, and then we basically just switch to NDX and index, and okay, then Nasdaq up. Yeah, like so. Try this again. Do we not have an NDX here? There should be Nasdaq, 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 NDX. Yeah, let's try that. How is that invalid? NSDQ, nope. What's NDX should be the official ticker, yeah? So why do we, or NDX 100, so those are the top 100, yeah? And so that's also the position I'm holding, which is NSDQ 100 on eToro, which we don't have here. Like, are you shitting me? Okay, let's check nothing. And what do we see as the first one? Nasdaq. Okay, might not be able to use wave basis for that one, but it's okay. Circling back here. So basically, again, we are looking for a corrective pattern. So that's the important part here, which again, if we switch to the cheat sheet, so since we finished one big wave one, we are now looking for that wave two that can be any corrective pattern, but not a triangle. And as for percentages, short reminder, I know it's hard to read on the screen for you guys right now, unless you have a big screen and watch the stream in full screen. But as a reminder, you can also find that cheat sheet as a PDF linked in the description down below. And again, wave two has a 42% chance to be a zigzag, 40% to be a flat, and then we have 18% left that divide up in other things. So it's like 42% this, and a flat would have a new all-time high in that case, which we don't have. And therefore, we are assuming that we have a zigzag, which will subdivide into A, B, C. And for that zigzag, that then again subdivides into an impulse or a leading diagonal, which subdivides basically like here. So 1, 2, 3, 4, 5. So circling back to the screen, my assumption is that right now we are basically potentially looking at 1, 2, might not be yet 2, so 3, 4, 5, which then makes up, yeah, where's 5? 5 is here, which then makes up wave A, and then so on. Yeah, now the point down here is like really randomly chosen. Doesn't say that we have to go there. If we again use Kennedy's channeling technique, we can set a starting point here, and assuming that this is our point 2, and then draw a parallel 2.1, then that would be our base channel, and we basically would wait for a breakout, in this case to the top and to the bottom, to indicate that we're now indeed in wave 3, and then take it from there. Now we're gonna zoom in from the monthly a little bit, obviously, to, let's start with daily first. And as usual, we have to adjust our points because they don't transfer very well. So if we zoom this, and then that one goes parallel through point 1, and point 2 would be then here, and again adjust that. So that would be our base channel, that would be our 1, 2, and then for that to be correct, that here would have to be a leading diagonal or an impulse. Just like with the SPX, it cannot be an impulse because wave 4 retraces into the area of wave 1, and yeah, like the leading diagonal is the unlikelier option. So if we wouldn't be already that far in the development, then we would actually consider an impulse more likely. But yeah, that's how it would check out as a leading diagonal. And yeah, there are no rule violations. Otherwise, I said we would see something like this. So at least there it checks out well. And which then means we would here look at another corrective pattern, which should check out as a, yeah, most likely, again, a zigzag. Although, let's check. Okay, there we don't have a table for it. Any corrective pattern, not a triangle. So for the leading diagonal, we don't have a percentage estimate as how likely it is which correction. But again, it should still check out as a corrective pattern, potentially like this, for example, yeah. Which means that right now, I mean, there are two options here. I think like here we are more likely still wrong. So I'm more confident in our labeling that we have here right now going on. Although there's still a chance that the smaller labeling here turns invalid and it retraces a little bit further. But I'm relatively confident in the overall labeling that we are now here on the downwards trajectory again. Which, by the way, looking at it, we can also confirm if this is a wave 1, because we would obviously have to subdivide it. For that, we, however, would have to zoom in further. So let's say an hourly chart. Because if this here, and again, have to move the points a little bit for things to properly align. So if this here is indeed a wave 1, it again has to subdivide into, you guessed it, either an impulse or a leading diagonal. So if we again take our Elliott Wave tools, and in this case again say leading diagonal, then voila, there we would have one that fits in. So 1, 2, 3, 4, 5, and yeah, there also, yeah, like if we would look closer, we could potentially confirm this is a leading diagonal. That as probably it might not end here, but might end here with some weird combination corrective pattern. Yeah, wave 4 might also not check out like this, but be like this with, oh no, not like this, but yeah, like if we look lower, we should see a corrective gap here as well. So, or it turns out to be like this with here a flat corrective pattern. That seems a little bit more likely in that case, and would also give us a better trend line. So move it back and then just move the dot here. Yeah, so that would also give us a better trajectory that already predicts roughly where wave 5 would end. So yeah, like even if we look even closer, then we are able to get that whole thing to at least still follow the rules, which is fairly nice. Now we're gonna go back here. We were on 2 days, so yeah, and I mean the small one, it's obviously impossible to see on that scale now. But so on this one, I'm relatively confident, with the exception of, okay, I'm gonna get rid of that one. With the exception of that pattern here, although we can confirm that as a wave 1, it's possible that wave 2 hasn't finished yet here, and that we're still looking for a little bit more movement upwards before we turn around. But overall, yeah, like I'm fairly confident that my short positions here are going to pay off. Sadly, I'm gonna end the month of March still at a slight loss of like 2% or so, or might be a little bit more, a little bit less, depending on how the last days of the month go. But yeah, I expect during the next couple of months to actually have hugely or highly profitable months again to catch up what we lost so far beginning this year. And yeah, I'm doing my damn best, obviously, to also again end year number 4 in profit. Now for the NDX, however, so there we have a little bit of a, yeah, not a dilemma, but it's just not as clear-cut, because while we have a clear-cut, a relatively clear-cut leading diagonal that finishes here, we don't have a clear-cut end for that corrective pattern. It clearly didn't end here because we have a new low or high in this case here, so which could again develop further, which means we don't even have the option to yeah, like really be 100% certain. We could dig a lot deeper to try to figure this one out, but to be fair, I'd rather in that case assume that if the Standard & Poor's, so if the SPX 500 is crashing, or is going to crash or drop, or however you want to call it, then I'd rather have the assumption that the Nasdaq isn't going to be far behind, even though the pattern might play out a little differently. It stands to reason, if we are now waiting for a wave 3 that to go downwards, that the NDX is going to have a very similar behavior. Yeah, like, yeah, that's just what I'm not betting on, but my assumption on this whole thing here, and which means we're actually a little bit stuck with the NDX and just have to wait for future candles to develop, and that we are, again, back to the screen share, that we are, for now, done with the labeling. So again, if you check out episode 1 of the Daily Market Mastery in combination with the episode number 4, where we started that whole pattern here that you can see right now, and then lastly today's episode, then you're pretty much up to date, because episode 2 and 3 we were digging into a pattern that turned out invalid, so you didn't miss anything here, and which also is convenient because we are already at the end of our roughly 30 minutes for today, and we're going to continue here. Today's Wednesday, so there's going to be Daily Market Mastery also tomorrow. And for tomorrow, then we might actually look into individual stocks. So I'm currently still holding Shopify, Ford, Black Knight, and GameStop. I know many people are super hot for GameStop, but that's the one stock, although initially I covered it with Elliott Wave Theory and it applied really, really well. We're now at a point where there's just a huge portion, switching. So we're now at a point where there's just a huge portion of the shares outstanding already directly registered by shareholders, like me, for example. And as a result, there is just the mass psychology that applies to most indexes and stocks simply doesn't apply as well anymore to that part or to that stock. We can try to label it, but we would do it last. So I would say we start tomorrow with Shopify, then Ford, and then Black Knight to see where they may or might not go, and for me to adjust my positions there. To be fair, I'm gonna say this straight away. So I actually opened positions in Shopify, Ford, Black Knight, and Alibaba based on a very, very superficial labeling without digging deeper. Turned out to be a bad idea in case of Alibaba. There I hit my stop loss. I mean, it was not a big loss, but still. And so we can use the stream tomorrow and the future streams while we watch how the price development continues here, and if our labeling turns out valid or invalid, we can use that to look into the individual stocks that I'm still invested in, to either decide to close the positions, adjust stop loss, and take profit levels, or to maybe even increase the positions. And once we've looked into those 3 stocks plus GameStop, although with GameStop again, Elliott Wave Theory will not apply as well anymore, then we can actually look into new potential investments that, despite my overall bearish outlook, might still have a positive time ahead or have huge potential for selling short. So with that, that's pretty much it for today. Don't forget, again, everything you need, like free book that you can read online, free 1-page cheat sheet, like free software that you can use for Elliott Wave Theory. Everything is in the description down below. And if you want to check out my portfolio to just verify my track record, well, that's also in the description down below and in the pinned chat message. And so have a great day, and I see you all then hopefully tomorrow with another episode